We had the Kenyan market in yesterday's session flat, slightly to the negative, still very high volumes for a lot of the companies which have actually been hitting the high volume mark for quite some time. KenolKobil, Safaricom, Equity Bank being the favorites in yesterday's session. The question is where to from here, because earnings are starting to filter through. So we're starting to see a slight change in sentiment across the board.
I think the sentiment has been changing slightly, but I don't think it's a real dramatic change in sentiment. I think there's still clouds in terms of interest rates and the macroeconomic environment, inflation. So I think the market will be buoyed by the current results, especially when the banks start announcing. We had Barclays announcing last week, but once Equity, KCB, and Standard Chartered start announcing their results, we could see the market gain some ground. But I don't think the rally will be sustained over this current earnings season until the macroeconomic environment starts to change. And one thing that could help with that is that a reduction in the CBR by the central bank. But until then, until monetary policy starts loosening, we'll see a lot of sideways movement.
It's actually quite interesting because Old Mutual Securities has come out and said that banks could experience 3 consecutive months of subdued growth, given the fact that we've seen very high interest rates in the country. And let's just take a look at Barclays Bank as a case in point, because we saw earnings flattening coming through because the lending book didn't increase as much as many people were expecting. However, they did manage to keep costs under control.
Yeah, I think Barclays adopted a deliberate strategy to constrain the growth of its deposits, because it was of the opinion that the management was of the opinion that the current funding environment is too high, and there is no point of accepting deposits at 20%, because lending them on at 33% could lead to the defaults down the line. So I think it was a deliberate strategy to keep deposits low and grow their balance sheet moderately. And I don't think that will apply across the board. I expect to see significant growth in KCB, Equity, and Cooperative Bank. But I think the foreign banks such as Barclays and Standard Chartered have decided to take a more conservative approach.
Let's take a look at the interbank lending rates. We know Barclays Bank numbers came through at 33%. The central bank has been urging banks across the board to try and bring down lending rates, but lending rates are very high, not only for consumers, but also when you look at the interbank market. What kind of trends do you foresee going forward? Inflation is slightly softer, but still not soft enough to warrant a single-digit interest rates level.
I think the trend will be a downward trend going forward. One thing that is happening is that already in the short-term primary government paper auctions, we've been seeing a reduction in the T-bill rate from around 21% right now to 19%. And this trend is going to continue, especially once the trend in disinflation becomes entrenched and the market consensus is for a year of disinflation. And once we start seeing liquidity trickling back into the market because of maturities of the CBK's repurchase agreements, and a reduction in the CBR, which is expected in the second quarter, then we're likely to see a reduction in interest rates. So I don't think that the current funding environment will persist at the current levels. And historically, interest rates in Kenya have been pretty volatile, so I wouldn't be surprised to see single-digit interest rates in the primary market by Q3 of this year.
Let's now delve into KenolKobil versus Total Kenya. Total Kenya very much entrenched in the Kenyan market. KenolKobil, however, has its tentacles throughout the East African region. We saw KenolKobil actually posting nice gains on the equity front yesterday, up around 2%. A lot of expectations on the earnings front. Do you think that the company can actually come out with a lot of the numbers that have been put forward by investors?
I think it will post some growth, but not. The growth won't be as good as it was last year. One of the things is that KenolKobil, there has been a trend when oil prices are high, the performance is not as good. And this year, in 2011, not only were oil prices high, but there was also a challenging funding environment because interest rates were higher. So funding their inventories was more expensive. And I think this is going to eat into their profits. So moderately or conservatively, I'd guess around 9%, 10% EPS growth this year. And it would be a pleasant surprise if it was higher than that. And I mean, compared to total Kenya, given that it's, as you said, it spread its tentacles throughout East Africa and even Southern Africa, then we expect the regional subsidiaries will do well and boost the bottom line.
When it comes to the two stocks and, of course, the investment opportunities there, what is your preferred pick, and do you have any price targets on these two specific companies?
At the moment, in terms of equities, it's a risk-off strategy, primarily because the funding environment is still good for T-bills. However, I would suggest that to avoid the industrials because of the exchange rates, the commodity prices, and to go moderately on the banking stocks. However, there are still some opportunities with Scan Group. We've seen, in as much as the advertising environment is more competitive this year, we expect advertising to pick up, and Scan Group could be benefiting. I expect at least a price target of 35 from the current levels, and that would be a significant upside.
Samora, we also had East African breweries out with results last week. We saw a top-line growth of around 36% that came through. And today we just heard that changes at the top are starting to now come to the fore. This is after the exit of the company's chairman. And interesting when you see Diageo's seats sitting at around 4 seats from the 2 seats in 2008. Diageo owning just over 50% of the company. What kind of changes do you think are going to occur at the top, and do you think this is going to change sentiment towards the company, which has been favored for some time?
I think the change of the chairman was a significant event. I mean, Mr. Eleni had been there for 24 years, and his departure could be seen as maybe, and the introduction of Mr. Charles Mushene could be seen as a reinvigoration of the board to bring new ideas, to strengthen corporate governance standards. And that could change sentiment. But also the fact that they are opening a canning factory is going to be significant. Due to the alcohol laws, investors are of the opinion that more people will be drinking from home, and that points to the significance of opening a canning factory. And that's why maybe we've seen a lot of good sentiment on the stock of late. I always maintain that, I mean, the East African population is around 140 million strong. And when GDP per capita continues to rise, more and more people will be drinking. And there's still significant room for EABL to grow further in this market.
Fantastic. Thank you so much, Samora. Much appreciated for your time. We have to leave it there. Samora Kariuki, research analyst at NIC Securities.